Friends, this is Martin here from Secrets, channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we are looking at what happened during the day in the markets and how we can plan for a good, better trade for the next day. Right. So we had choppy markets, not just today. It has been choppy, most all the days in the last 2 weeks, and today it was trending up, green expiry. Monthly expiry ended with a green candle for the on the daily charts for the Nifty and the Banknifty, right? So let's look at the pre-market analysis for April 29th, Friday. A new expiry is going to start 2022 based on all these parameters that you see on the screen. We would also have some wrap-up and actionables as well, right? So let's get into and see what happened today. So here we have a green candle, right? Highly volatile. You can see the wick size on both sides. And right side you have the Banknifty, which is also having a green close. And look at this, what was happening in the last 10 days, right? 1 2 3 4 5 and so last 2 weeks, 9 days. What is happening is, so it gapped down, leaving a major gap resistance at the top, and then we're talking about Nifty. So it went down, up, that's what choppiness. That's like inverted V, inverted V, right? This is exactly what has happened. Yesterday we had a down day, then next day you had an up day, then you have a down day, an up day. It's a kind of movement that's happening. Real choppiness is what you see. Banknifty also behaves more or less the same. But today it was a good bounce up, right? A gap up that happened, right? And let's look at the numbers. Like 200 points gain, 1.2% in Nifty, and 1% 393, almost 400 points gain on Banknifty. So 1% move up. And Nifty managed to close expiry above 17,200, and also the 200 DMA is reclaimed, right? But still below the 20 DMA for the Nifty. And Banknifty has reclaimed 50 DMA, but still below the 20 as well as 200 DMA, right? So overall, you can see, right? So this is where it is, right? The price is closed above the 200 DMA. Nifty, 20 and DMA confluence is happening here, and Banknifty is still far away, right? And you have gap resistance on the top, Fibonacci 61 retracement line on the top, 20 DMA on the top, right? All resistance on the gap on the Banknifty also at the top. So Banknifty is slightly lagging behind, if you can see, alright. And you can see a trend line channel is what is happening. A breakout is attempted, it did not sustain, fall down after a few days of up move, big mega up move, and then now same happening in the Banknifty also. So let's see what happened in intraday. Intraday, this is what happened, right? We had a gap up, but then did not sustain and fell down. Then a V-shaped recovery happened, and that recovered everything, and then further trended up. All in the last 3 p.m. move only, it had a slight fall, dip, some profit booking or something, or expiry day, gamma moves happened. That's the same thing. Banknifty also gapped up, did not sustain, made a dip, then did a V-shaped recovery and trended up till the last 3 p.m. gamma move. That's the price action on the intraday on both indices. Bollinger Bands, what do they say? It's consolidation clearly visible, right? But in the Nifty, you can see some expansion of bands on both sides also happening. That means volatility is likely to increase, although the expansion is indicating that. But sideways movement is what bird's eye view tells you on the daily charts. Same with Banknifty also, right? Here that expansion is not there. Banknifty volatility is reducing, right? But both of them has a price below the 20 day moving average. So the expectation is a bearish. It's a bearish bias with consolidation volatile. That's what Bollinger Bands is telling. Now let's move to the support resistance levels. We have the middle resistance first at 17,350 400 levels. Then above that, then 17, we have the resistance at 7. So that's also a gap resistance. 17,450 is where a gap resistance is there, and clearing above that it will be very positive. 17,500 is also a Fibonacci 23 retracement level. 17,500, 7,600 that levels, right? So close above that also will be no further more bullish. Then the resistance will come at 17,800, 17,850 levels, right? Then 18,000 on the top. About that, right? That's how it goes. Downside, the supports could be seen. So right now I just taken a support at 17,000 level, 17,050, right? So it's a gap that has got filled today. There's a gap support which has got actually the gap was filled. It was no longer valid. So this is invalid gap. It's not a gap. So Basically it has taken a support at 17,750, and then if that bridges tomorrow 16,800, 16,900 Fibonacci 38 is where we end up, and below that's 16,700, 16,750, then 16,550, 16,650, then you have 16,450 level, which is the Fibonacci 50 retracement, which has also got another gap support. So that's resistances and the supports on the Nifty. Banknifty, if you see, right now we have once again I can't see properly, let me see. Once again you have the support zone C near 37,000 is where the first resistance is, not support. So resistance one is where 37,000 is, and above that you have 36,500 is where the let me go back to, I can't clearly see that for some reason. Let me go down and see, what do I say? So Banknifty, the first place would be the 36,300, 36,800 Fibonacci 38 retracement is where the first resistance to take out. Then you have 36,900, 37,000 level, which is got a gap resistance also just be cleared after that. Then 37,300, 37,500, which is Fibonacci 23 retracement level, and that is cleared. Then you have 37,800 levels, then 38,000 levels, then 38,500 levels, and 39,000 and 39,400 levels. So 39,400 is very crucial for the confirmation of the rally upside. Similarly, downside the supports will be starting from 35,600 to 35,900, that's on near to 36 level, 36,000 levels. Then 35,300 Fibonacci 50 retracement level is support. Then 34,350, 750, that's on. And then you have a gap support also, which is 3600, 34,100 Fibonacci 61 retracement level. So 34,000 on downside would be a very good support, and upside 37,500 first, then 39,400 next. So these are the levels that should be watched for. Nifty, we already seen that levels, we know, right? This first 17,500, then 17,800, then 850 actually, then 18,000 rounding number, and then 18,350, previous swing high. So those are the level. Let's get back to the slides and continue. Momentum, if you take the momentum, no divergence seen as of now in the sideways movement. Momentum is sideways on both indices, on daily charts as well as in the medium term charts weekly, right? So clear consolidation is what the momentum is, also sideways. Trend is bearish still, although we had a up move today. It is heading towards a crossover on the ADX indicator. DMI negative and positive is going to crossover probably coming days, but trend remains to be bearish on both indices, on both time frames of short term and medium term, right? VIX in volatility. India VIX cooled off again, so it's cooling up one day and then spiking next day. That's what is happening. So 6% and again fallen below the 20, which is good. So at 19.37 is where we are at the India VIX level. Implied volatility of Nifty is 19.3, and volatility percentage is 70. Cooled up to 78.4 kind of level. So just fallen below 20, which is good, but you have to be cautious as to whether it will spike again back to 20 plus levels, right? So VIX is cooled up slightly today. Markets moved up. So open interest analysis is for the next expiry, that is May 5th, 2022. So the active trading will be happening only from tomorrow, mostly for this next month's or next week's expiry. So the numbers that is put in here may not be that much relevant, but still for reference take MC. 16,000 and 17,300 is where the highest put and call rating is. 17,000 and 18,000 is where the second level of highest put and call rating is. 35,500 and 37,000 is where the highest put and call ratio is there for the Banknifty, and 36,000 and 37,000 is the second level of put and call, the support resistances for the Banknifty. Put call ratio is 1.1, that is bullish for the Nifty, and 0.9 is also very close to bullish on the Banknifty. So long multiple is what we had, and short covering rally is what we had in the Banknifty. Both are bullish, right? So overall for the next expiry, as per the put call ratio, as per the futures open interest data, as per the options open interest data, all shows some bullishness, because here also you can see that the highest put and call rating is seen at the in the put side, not on the call side. Nifty showing some bearishness because the highest put rating is there. That's why I have 0.9 put call ratio here. So yeah, so overall this is what a picture of the open interest analysis, which as I said may not be as much accurate as on the other days when we look at, because trading is just going to happen for the first time tomorrow and Friday. So heat map, Reliance did good, ICICI Bank did good, all the banks are doing good. HDFC Twins did not look that great. IT is also back recovering, right? Investment Bank. So L&T, and so heavyweights are all did somewhat okay except HDP twins. So all the sectors did well except automobile, which was performing okay the other day. So we'll see the sector performance later. So before that, I'd see the index heavyweights and see what happens, right? So it is trying to climb to the sideways HDFC Bank, and it is at a support zone. Momentum is almost in the sideways. Right. HDFC also doing the same, is consolidating, but it slipped down from the resistance levels, and then momentum is caught up into the sideways, already in there after it has fallen down to the bearish zones earlier. So it may take some time for it to retrieve and climb back. So until then, stay away. Lines continue to perform very good. No, it's in the bullish zone still. Right? We had a green trade today. It is a black breakout. It is a cup and handle breakout. So patterns, price, momentum, trend, everything is doing good. IT seems to be doing a comeback after a big fall. It is still in the bearish zones, but today is a green day. Right? Momentum is set to catch up. Right? It will slowly climb to the sideways. That's when we can see whether it takes a support at 40 before we can take a bite for a good long trade, possibly, if it is recovering. Right? Tata TCS also not do much, but it's in the sideways zone, consolidating on the edge of a trend line channel. But you have support zones below. Even if it falls, it will fall in there and then consolidate and start falling further down from there. So that's a very good support. But a lot of time before it can catch up. You should see some bullish signs of taking support at the momentum levels, before you can enter. For early, retrieval rally on both the IT stocks. ICICI Bank, it had been showing some retracement for the last several days, probably 2 weeks, and it still continues to be in the. Today it had a green day, continues to be in the sideways zone. Trend may be crossing over, may take some time, but yes, it's in a bullish mood. So whether this bullishness ends here at the support zone or would it fall down from there is what we have to keep a close watch. Most likely it will consolidate and take. This is support zone where it is, so it may remain there, consolidate, get the energy, and then boom, it should go up. Yeah, but watch out for the RSI moment to climb back to bullish zones, and watch out for this zone where it is consolidating at the support. Mahindra is also green day. Mahindra, as I always say, it's a very good support zone. It is simply consolidating about that, bouncing up and then falling back, bouncing up, falling back. That's what is happening. Momentum is definitely sideways for the Kodak. So overall, good things are happening in Reliance and ICICI Bank. IT is trying to recover. HDFC is also trying to recover, right? So that's what heavyweights are doing. Kodak is just consolidating. So heavyweights, that's a show. Sectoral performance, if you see IT, it was green day. So IT up, metal up, auto up, pharma up, FMCG up 2%, reality up 1%, pharma 1%. So yeah, small up move is what has happened overall. The thing is, auto is in the bullish zones, and FMCG also now is in the bullish zones in the short term. So trades could be taken with tight stop losses. Normally, with confidence trade can be done only if the weekly also catches up to the bullish zones. That has not happened, so cautious on that. And bearishness is still not over for the IT. Metal is going to sideways, just like pharma and reality that continue to move sideways. So overall, auto and FMCG is giving some hopes on the bullishness early, right? Otherwise, other sectors are all sideways or bearish like IT. Institutional participation data is not coming. We'll just quickly check if it has come in the last few minutes. Most likely it will be down. Yes, it has come. So you have a small buying that has happened from the Fyers. 743 crores of cash buying has happened by the FIA after a very, very long time. But domestic institutions also did not buy that much. Equal amount of buying, 780 crores of buying in the cash is what has happened. So that's good news that some buying has come back, but it's very small buying, and we never know. It may be a pause of after a big selling, it may be a small pause. That's what we have to understand. You have to keep a close watch, but at least it's some relief from the institution participation side for very short term. So this is where the trouble is, right? See, look at the US dollar index on the right side. It has hit a multi-year all-time high levels, 103 kind of levels almost. The next one is a 21-year that it resistance that is there now. So look at the momentum that's rising. So the dollar index is historically high, right? And USD INR currency pair also, look at that, 76.5, very close to the all-time high of 77 kind of level. So momentum is bullish, trend is bullish, everything is bullish on. So OP is weakening basically, so which is a concern for our markets, right? And look at next trouble. Global market, the US markets, three major indices, Dow Jones and Nasdaq and S&P is what you see here, all are bearish. And at the edge of a major support, all of them. This is a major support for Nasdaq, this is a major support for, and it is on the edge. It is almost given up on in the S&P 500, but Dow Jones hanging on there, as Nasdaq also hanging on that major support zone. So we have to keep a close watch. All of them have the bearish zones in the short term momentum, not even sideways. So this is what we have to be concerned about. The price of the rupee weakening and the US markets are crashing. About to crash on the edge. Crude oil cooled off a little bit, but still above 100. It had made a small dip below 100 last week, but seems like it's again just consolidating and not dipping. Now they're moving up. So at least sideways momentum gives some relief on the crude oil. Gold is also consolidating, not ready to give up the support zone from where it had taken two attempted breakout and failed. Now it is in the bearish zones on the short term gold. So we'll have to see whether it's going to dip back into the next support zone down here at 1797 kind of levels, right? So yeah, that's about the commodity gold. Now two picks for the next few days probably in actionables. NTPC, power sector and rarely is working good, and this the weekly chart rate has been on a daily charts, but look at the trending in a channel and surrounding pattern breakout also weekly, good volumes, good momentum, good trend and good price patterns. So it could give at least till the channel top very good swing trades at least. Coromandel International is also having some kind of consolidation and then a breakout from a small trend line channel, right? The volumes are good, momentum is good on both time frames, and trend is also good. So it should, but the only thing is you have to be cautious here with tight stop because it's very close to an all-time high level. So whether it's going to give you a close above this is what you have to. If that happens, then it could give a very big move, right? Just have to trail it, but until that resistance of 9 what was that level, 950 nearby levels, 9, let me just quickly check that levels, I can't see it. That resistance zone would be 930 levels, right? So 930 is what it is, right? So there's an all-time high previous resistance zone. So this 930 level, you have to be very careful. If that is cleared, then it should give very good move if a green close happens about that. So otherwise, volumes are great, trend and momentum, everything is great. So two actionables, NTPC and Coromandel International, right? So weekly charts, when that is just to give you clarity on the price action is why it is put. But the entries has to be made on a lower time frame whenever you get a retracement or a price above the alert candle, right? Either of that. So wrap up, absolutely no change in my view. I didn't have to make any changes. This is exactly as it is for the last 2 days. It's a neutral view with a mild bearish bias, right? That's based on chart pattern, support resistance levels, and the momentum, volatility, trend indicators. All of this combined together, this is what I come up with. I think it could be a neutral with a bearish bias. Move that may be happening for the next few days. So the market has definitely done good recovery, but it has fallen back to the strange trend line from where it has broken out, and there is some consideration that is evident from the body there very clearly, right? So you just have to watch out if you are able to make a breakout above that previous swing high that was made, or would we break down to make another new lower swing, right? This is what you have to watch. But overall it is clearly indicating that there is consolidation now. But today you can see that the expansion of the bands on the Nifty also is happening. So is the consolidation over? Is it going to expand and break down, or is it going to expand and break out? Never know. So that's the kind of situation. We have very choppy markets that's happening because there is uncertainty still there. Fyers are not in a great buying mode, although there is a pause that happened today, but in general there have been sellers since almost a year now. No? So it's crude is still at a high level, rupee is weakening, global cues are not good, US markets are crashing. So what else we need to be bearish about, right? So on upside 17,500, then 18,350 downside. On the Banknifty 37,500 upside, and then 39,400 after that, and downside 34,000, right? On Nifty downside will be 16,400 levels is what we'll watch for. So what is happening? Inflation worries are there, Fed hikes are there, global markets, US markets crashing is there, right? Volatility weeks. So all this still there. Volatility is below 20 does not mean that it cannot spike back. So anytime it can give you a surprise, based on a small event that could happen. So keep your stop losses tight intraday and have hedge positions always, so that you don't end up wiping out your capital, right? So the moment VIX is greater than 20, stay away from the game, or cut short your position size, and always have hedge risk defined strategies that has to apply if you're trading on the options trading, right? And when a big fall happens, always hedge using some option strategies or some other instruments, so that we can hang off on your long-term investments, right? So if I selling is also still there, so that might be mild bearish, neutral bias, neutral with mild bearish bias is what I have view for the next days. So if that helps you to frame your own view for the market, based on all that what we had studied and discussed during the last half an hour, then definitely consider hitting the like button if you're not done that, and subscribe immediately if you're not done that, and share it to a maximum friends so that everyone can learn, and also it keeps us motivated to keep doing this every day. We have very few subscriptions, by the way. Right, so thanks for the help in advance. Thanks for watching. Happy trading, happy learning. Bye.